This is another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial market. And today is Saturday, which means it is time to do a weekly review, which I have already completed. That's the first thing that I did when I got up this morning. I got up, got out of bed, and I was excited to attack this weekly review because I know that as I go back and I study my past performance, there's going to be a lot of lessons that I'm going to extract that show me exactly where I'm going wrong and exactly where I'm going right and what I need to do to get to the next level and take one step closer towards profitability. That's all it is. So when I'm doing my weekly review, I'm like, damn, like this is fun. Think about it this way: you are perfecting your craft. You are an artist, and this is your creation. Think of it that way, because essentially that's what it is. This is an expressive form of creation. Anything that you do is a form of art. If you love doing that, it's a form of art. Trading, for me, is a form of art, and I'm going to treat it like that with passion, and I'm going to treat it as my creation. So the first thing that I did was complete my weekly review, and now I have a plan in place, things that I know that I need to do to get to the next level. So with that being said, let's get into the weekly review. So this is the system that I'm using. It's on TradeZella. Everything that I have is integrated into this one software and one beautiful system. And if we just go to the notebook, we can go right to the session recap. This week was the August 18th to the 22nd. And the first thing that I touch on is my performance stats. So we can see that I was slightly profitable this week, the $460 profit, which is better in comparison to the last 2 weeks. I mean, look what I did the last 2 weeks, right? A lot of things I did wrong over the last 2 weeks, and this week was a good week of trading. This week makes me confident in my ability to go ahead and attempt an eval next week for the first time in 3 months because of what I've done this week, and realizing that I only get better. Your trading journey is an exponential progression of just getting better. As long as you show up and do the same things day in and day out that you know you need to be doing, as long as you carry out your processes and your systems on a day-to-day basis, and you stay consistent and you believe in yourself and you have faith and you're persistent, you can't fail. Understanding that principle, I'm confident that I should be able to attempt an eval next week after the last 3 months of trading on a demo because I'm completely attacking all the constraints in my trading, which we'll go over. So back to the weekly review. Session recaps. My performance stats, number one being P&L, $460. This I don't really care about much. What I care about a lot is going to be my R multiple. So I was barely up over half of one R multiple, meaning I made a little less than 1 times what I risked. So slightly profitable, but obviously nowhere where I would like it to be. The thing is, though, if we look at the win to loss ratio, we can see that my win, the one winning trade that I had this week, was 3.56 times my average loss, which is great news because this week, if you've been keeping up with my videos, you know that one of the main constraints in my trading is that I keep going for full swings in price and keep going for these trades that offer a huge R multiple and demanding that the market give me exactly what I'm looking for. And that has led to self-sabotage where I'm catching solid setups, but they're coming back on me and I'm getting stopped out for break even or even taking losing trades where I was up over 60 handles at one point in time. It just does not make any sense. So to combat this form of self-sabotage, I've been going for low-hanging fruit objectives, narrowing that down, stop being so worried about the market delivering exactly what I want it to give me. All I'm looking for is a low-hanging fruit objective, and I did that beautifully on Wednesday, and that win was 3.5 times greater than my average loss this week. So that tells me, number one, despite me lowering my R multiple, my win-to-loss ratio is still remaining high above 3 because my risk was exceptionally well managed this week. So that's good. That's great. Trading days I had this week was 4, and I had 5 trading days on those 4, or I had 5 trades on those 4 trading days, which is good. It shows me that I'm also taking lower trades. The trade frequency is lowering, which is good because less is more in trading. That's the paradigm. That's the paradox of it. My trade win percentage was only 25%. Still not where I want it to be, obviously. This number should be a lot higher, but because of some mistakes that I made this week, it's only 25%. There was 3 solid setups that the market afforded me this week in alignment with my model, but I was only able to capitalize on 1. Why is that? We'll get into it. My day win percentage is only 33%. I had 4 trading days. One day I didn't do anything. One day was a green day, and the other 2 were red. So red flags. My win percentage is still very low for getting the market approach on all 4 days correct, which means I spoiled solid setups, and I did. One of those setups that were spoiled was because I mistimed the move, not aware of drivers on the economic calendar. And another reason would be because of self-sabotage, trying to aim for those high swings, those high, huge R multiple trades. And the trade came back on me, stopped me after break even. So positives from this week. Things are falling back into a place. A lot of positive change this week. My trade frequency is remaining stable, not going crazy, taking 2 trades a day, every day. My win-to-loss ratio remains high, even though I am going for low-hanging fruit objectives. This is great news. The plan is working. Do more of that. My risk is very well managed because I only took a 2.8 R win, but my win-to-loss ratio is still above 3.5. I'm averaging less than 1 R on losses. This is great. On 4 trading days, only 4 trading days, eliminating the day that I know is likely to be shit, Monday with no driver, this is a game changer. If we go to the economic calendar, Monday has no driver. I know that's not an optimal day for my trading model. That day is usually going to be very, very choppy, very unfavorable price action, and it was. If we go look at Monday, let's go here. Let's go to a chart. This is a 15-minute chart, so if we look at what Monday did in the morning session, it was literally sideways. Now, that's nothing worth trading. Now, I'm not even going to show up to this day because I look at the economic calendar and I know it's not going to be good. So right there, that gives me an edge. That allows me to filter out the days that I know are going to be low probability. That's good. I did good on that this week. Let's go back to the weekly review. And then the second thing that I'm going to study is my market approach. So this week, I was correct on 4 out of 4 trading days, implementing the things that I'm learning simply because I am continuously studying higher time frame narrative and market approach. I've come to the conclusion that my way of arriving at bias is combining the 2 elements of a higher time frame narrative and market approach. If we look at all the days I was correct, I use the combination of these 2 elements very, very well. And that is why I was correct on 4 out of 4 trading days. So if I go back to each day this trading week, I give each day a little tag, what my bias was on the day, and if I was correct or incorrect from here, and then the setup that was offered on that day, and that's all I need to know really. So you can see that I was correct on Tuesday, I was correct on Wednesday, I was correct on Thursday, and I was correct on Friday. So I'm really proud of my ability to read the market this week, come up with one idea in price, and confidently submit to that. On Tuesday and Wednesday, the market offered lower prices, and I was able to frame that idea. Wasn't able to catch it successfully, but I framed the idea and it played out. And then on Thursday and Friday, sentiment switched, and those days offered buy setups, and I was able to read that as well. So I did really, really good at reading the market this week. Go back to the weekly review. Session recaps. And then in terms of execution, each point of execution has to be touched on. So entries, exits, risk and stop management, and targets. And then I also cover emotional situations that affect my trading performance. After that, it's going to be strengths versus weaknesses, the mistakes that I made this week. So if you read this is just going to be a brief overview of basically what held me back this week. So I deliberately ignored the plan I created to combat myself from prioritizing the need to be right over making money, leading to self-sabotage, and that was on Tuesday. I had a solid trade that came back on me. We'll review it in a second. And I led myself down the road of hope, knowing that my sell was still dead and 100% likely to come back on me, but refused to secure open profit out of hope. That was also on Tuesday. Then I have a strong tendency to execute very fast into the open. This was on Thursday. And I didn't reference the economic calendar on Thursday, which led me to mistime the move, which was on Thursday as well. Strengths I demonstrated this week. Coming to the market only looking to be a buyer or only looking to be a seller. That's it. No flipping bias intraday. One idea with conviction is the equivalent or it produces the best sessions. I only traded in the direction of my market approach every day this week. That is the confidence and conviction I have to build in my market approach. And then at the end of the review, I'm just going to do an overview of how I held myself back that week. How did I grow that week? The biggest lessons from this week and actionable steps I can take to get better and fix the problems I have. So let's do a brief overview of each trading day, starting with Tuesday. So if we go into each daily process, here's Tuesday, 19th, optimal market approach. So today I was looking for lower prices, and that ended up playing out. Now, what was wrong with Tuesday that prevented me from being able to capitalize on this movement? Well, the first trade that I took, I was looking for the market to break lower right at the open in my market approach. If we go to the daily journal, I'm looking for a bearish discount gap opening setup, meaning the market has a gap lower opening, and I'm looking for the market to reject that gap and stay heavy. So I'm seeing if price can stay heavy at the open under Monday daily low. I'd like to see it targeting previous weekly low. I'd like to sell it, right here. So what happens at the open? We get this, right? This gray line right here is Monday daily low. The market breaks lower with speed and aggression. The first sell that I take is going to be inside of this gap. Now I know where I went wrong here. I got a bit excited, trying to find a way to get on side with the move. I framed a sell out of the lower quadrant of this gap right here with the stop loss above this candle's high, anticipating this gap to stay open. I thought it would stay open. I thought the market would stay heavy. But if I stay patient, I stay calm, and I let the dealing range frame from this high to this low, find equilibrium of that, I know it's only valid to be a seller in a premium, never in a discount. The market rebalances to a premium, and that's what stops me out of this sell. And then I was able to capitalize on some downside movement on the second trade, but I spoiled it with trade management. So here is just simply selling in a premium. That's it. On the following trade, I sold first presentation. This is my execution right here. I went in at the market. You can see it's perfect. I literally sold the high right here. It's beautiful. I sold first presentation at the market. When I see that this candle trades up to the gray line right here, which is Monday daily low, the following candle closed on it. That tells me that I can anticipate a drive above these highs to fail, and it drives into first presentation as well and instantly rejects it. So I can pull up the execution from that trading day. Where is... This was what? The 19th? Okay, cool. Let's go to the 19th. So here's the first trade, right? Get tagged in there. This trade is in a discount, and that's why it does not work. And then my second trade is going to be executed at the market as the market is driving up into first presentation, and I'm anticipating a drive above these highs to fail because of how the candles close on Monday daily low. Remember in the pre-market plan I said I want to see it stay heavy under Monday daily low and look to be a seller at the open. So I'm selling at the market, boom, right there, with a stop loss above the midpoint of this gap because I'm anticipating this to stay open and price to stay heavy and drop for previous weekly low. So what happened in the trade is this. If you watched last week's review, you know that I created a plan to combat the number one constraint, probably the number two actually, number two constraint in my trading. I keep going for these full swings. I'm more worried about being right than actually trying to make money. Now this is also influenced by the fact that I'm in drawdown and I'm seeing the take profit. You can see the take profit down there, right? That's the objective I'm looking for, is previous weekly low, this gray line right here. Now if that delivers, this trade is going to yield 2.6K. I'm looking at that dollar amount and I'm thinking, damn, this is going to literally eliminate all of the losses that I've taken over last week and even the week before that, and I'll be up on the month. So being in drawdown influences me to go for these far objectives. And because of that, I know that I should take off at the low day because of the plan that I've created from last week's review to combat this mistake right here, just going for the full swing and just focusing on low-hanging fruit objectives, focusing on consistently compounding small wins instead of trying to be right, instead of trying to get the huge swing in price. So I know to take off at the low day, and I don't do that. What happens? Well, eventually the market makes a new low day, and then what? I have a rule that states if I'm up over 60 handles in a trade, I have to move the risk to break even. What happens? I don't take off, it comes back and stops me out for break even. So you can imagine how frustrating that is. Now actually I was able to handle this situation very well emotionally because I've changed my daily routine to prioritize the trading session. What I was doing before is I would literally wake up at 4 a.m. and this is another huge change that I made this week. I would wake up at 4 a.m. I would either have a workout, and the way that I work out is extremely high intense. I'm just using a lot of heavy weight and going to absolute failure. Or I would wake up at 4 a.m. and work for 2.5 hours before the market even opened. So before I even get to the charts, I'm burnt out, either because I worked out or because I worked for 2.5 hours. And I only give myself a 10-minute break starting at 7:40 to 7:50 before I'm on the charts and I'm trading for that session. That doesn't make any sense. I'm coming to the chart and I'm already mentally exhausted. And how did I feel too? How did I feel? I felt extremely low energy. I lacked focus. And every little thing that the market did that I did not want it to do pissed me off. So I knew I was not emotionally sound because I'm coming to the market burnt out. And if you look at my performance as a result, my daily routine only changed this week. And you can see my performance changed this week. If you look at the previous 2 weeks, look how I performed on that daily routine where I was not prioritizing the trading session. I was coming to the market already burnt out. The decisions that I make are awful. My quality in decision making is trash. And my performance reflects that. This week I changed that and I see a positive change. So that's another reason why I'm confident in attempting an eval next week. This trade comes back on me and stops me out for break even. Okay? So now we know what we're on with Tuesday. Let's talk about Wednesday. Wednesday was a good trading day. This was a 10 out of 10 session because I come to the market and I'm so confident in the market just offering lower prices. So what I have highlighted here is just the things that I note to arrive at my bias from the higher time frame narrative. Yesterday's large down candle confirms the high week is in, and then market criteria overnight. We've already dropped below the previous day low in the overnight session. It's creating low resistance sell side as it rebalances that drop, which I see as potentially setting up another sell day. So if we go to the 15-minute time frame right here, all the annotations that you see in this yellow are going to be market criteria that I'm noting that indicates that the market is likely to go lower. What you see in the blue is point of interest where I'm thinking the market could potentially reverse, which would be this gap right here. If you see in the light blue is draw on liquidity, what I'm thinking the market could reach for. So note the low resistance sell side that's building right here, and draw a trend line right there, right? So trend line liquidity. That means there's nothing solid for the market to grab onto and climb higher in this whole entire area of price right here. So what's it going to do? It's going to sweep that out in one quick clean move, and it does that. So at the open, I'm bearish. I'm looking for lower prices. And it gave me exactly that at the open. So you can see that my main idea was bearish discount gap opening, potentially looking for price to break lower at 9:30 with large down candles at pre-market low to confirm the reversal. So I definitely see the potential of it going lower at 9:30 again if large down candles confirm price has cleared the pre-market low. I'm only looking to be a seller. This is the biggest change this week. As I came to the market with one idea, I was only looking for one direction in price, and I traded in that direction. That's it. That's it. That's all you got to do. Come to the market with conviction and one idea and trade in that direction. Every time that I come to the market looking for two different ideas, either I'm looking to be a buyer and a seller at the same time, what does that lead to? I'm going to switch my bias intraday because I could probably see the market breaking lower. Okay, that's alignment with my sell plan. But now the market has delivered this level of sell side, or it's delivered an old low, and now it looks like it's kind of bullish and should be bought. Okay, now I'm going to buy the market because I have that buy idea in the back of my mind. It's going to influence how I feel about price intraday. Your market approach is literally how you're perceiving price for that day. If you come to the market perceiving price as bullish and bearish at the same time, it's just not going to work. At least in my experience, from what I've learned, from all the losing trades that I've had and all the bad sessions that I have, they all start with a market approach that is like this. So I can't do that. Eliminate that. That's the number one constraint in my trading. And I combated that so well this week. Every day I came into the market, one idea, one plan, and I executed on that, and I followed through with it perfectly, which is exactly what I need to do and build on the following week if I want to trade profitably. So we're getting there. We're getting there, right? We're well on our way. So I'm only looking for sells today. If we go to the 1 minute time frame on this trade, we can see that the market confirmed that literally right at the open and gave me exactly what I was looking for. So here's the pre-market lows, and I was saying that if the market could break through those with large down candles, confirm that the market's breaking lower at the open, then I'm going to sell this gap and I'm going to target the overnight low. That was the draw that I mentioned in my pre-market plan. So here's the daily journal right here. If we go to the 15-minute, we can see that I'm targeting the overnight low. The annotations in light blue are going to indicate my draw on liquidity. And if we go back to the screenshots, we can see that it sold the gap presented and targeted the overnight low. That's it. Boom, boom, in and out. Done. So easy. That's all it is. That's all I have to do. Just do that. That's it. So that's Wednesday. Wednesday is great. Wednesday is 10 out of 10 execution. This is a 5-star trade. Literally, I did everything right, and I combated the greed that I felt to want to hold for those higher swings and hold for those huge, huge price swings and demand that the market give me exactly what I want. No, All I'm looking for is the overnight low. All I want to do is compound small wins consistently so that I can feed myself. That's it, because I'm tired of being fucking broke. I'm tired of depending on someone else for life's necessities. I know I can support myself from trading. I know that I'm capable. I know that I am a great trader. All it requires is that I do the things that I know I need to do over and over and over again. And all it requires is that I continue to put in the reps, continue to get experience, continue to study these charts, and continue to master my model. And eventually I'm going to get there 100% without a doubt. That's how it works. It's just simply more reps and more experience. If you look at all the successful traders, let's talk about Umar Ashraf. Let's think about ICT. Let's think about Carmine Rosado, because that's another guy that I used to study doing supply and demand. How long have they all been trading for? They've all been trading for over 10 years. Why do you think they're so successful at it? Because they've been doing it for 10 fucking years. Think about all the reps they have put in and all the experience they have accumulated in 10 years of doing this shit. You've only been doing it for 2 or 1 or maybe even a couple of months. The skill gap, the only difference between them and you is that they have the reps and the experience. That's it. Now you can speed up that learning curve by deliberately and intentionally putting in more reps to get more experience. And that's what I do. And that's why I'm able to grow so fast. So right now I'm deliberately putting in more reps to get more experience with my trade model and just getting comfortable with doing one thing. That's it. I cannot fail. I cannot fail. So that's Wednesday. Wednesday's a good trading day. Let's talk about Thursday and what happened on Thursday. So I was correct here, spoiled the move here because of the mistake that I've been making over the past 2 weeks, which is foolishness. That was a pretty frustrating loss. Here, I did everything right, 10 out of 10 trading day. Thursday, what happened? Thursday, again, I come to the market with a bullish bias, and the market gives me everything that I'm looking for. Why wasn't I able to capitalize on any of that? Let's talk about it. Let's go to the daily journal. So here, the near-term condition is bearish, right? We know that Monday and Tuesday have closed lower, or Monday, Tuesday, and Wednesday now have closed lower. The near-term condition is clearly bearish, but how Wednesday's candle settled is not indicative of weakness. Matter of fact, I'm going to annotate the large discount wick that I left and see how the market reacts around that level to gauge the strength and weakness of the market. So if we look at the daily time frame, we can see how Wednesday's candle close left that large discount wick, right? Okay. This is the first indication that the market could potentially have a retracement. Now, what other confluences can I put together that would tell me that the market is likely to have a retracement today? Well, let's go to the 15-minute time frame and let's look at the market criteria that is setting up in the overnight session, okay? We can see that we have extremely smooth buy-side liquidity left in place in the overnight session, okay? And the market is dropping down below the midnight open, and it's opening near the low of day. That's not bearish at all. When I see the market set up like this, you better believe that I'm looking for longs. And what else do we have? Above the market price, we have a nested new day opening gap, which just means it's a new day opening gap inside of another new day opening gap. Smooth buy side above that, opening at the low of day, trading below the midnight open. That's not bearish at all. This is my buy model telling me to be a buyer on this day. And we have that discount wick from Wednesday's close, because we had this aggressive drop lower, but we came all the way back inside the range, and Wednesday settled right here. So let this huge discount wick grade that, and now I can anticipate a reversal at the midpoint of that wick, because yesterday's settlement is not contingent with lower prices. Market criteria overnight is not contingent with lower prices. So I've found that when the only reason I think I should be bearish is because that's what I feel like I should do because of the near-term condition, but market criteria and previous day settlement tell me that the market is likely to have a retracement, I know I can frame a high probability retracement against the near-term condition. So why am I not able to catch this move as well? If we go on these executions, what I was looking for at the open was the market to drop down, set a snare, because what I've noticed over the experience that I've accumulated, I don't know why my nose is so itchy right now. It just keeps itching. I think I've itched it like 20,000 times in this video already. I don't know what it is. Whenever I'm talking, my nose just itches. I don't know if there's something wrong with me or like allergies or something, but it's just like itches right here. And so I've rubbed it like 30 times right now. And now it's really itching. Okay, I'm gonna try not to itch it anymore. Okay. Drink of water. Let's get back to it. So on the 21st, what was I looking for? Let's go to the daily journal and find out. So essentially, I framed the logic behind why I was looking for higher prices today, so I don't have to read much of this. But today I was going to the day bullish, even though the near-term condition was bearish, because market criteria and previous day settlement indicate potential retracement. The only reason I think I should be bearish is because that's what the near-term condition is. It just feels like I should be bearish, but there's nothing really telling me to be bearish. So how's it going to get to the draw? We saw that Wednesday and Tuesday just cracked lower right at 9:30. If you saw the previous trades that I reviewed, the market just left right at 9:30. So when we have 2 days, what I've noticed from my experience is that when we have consecutive moves back to back that happen right at 9:30, typically they do that again on the third day. But on the third day, it's not the real move. It's a false move. It's kind of like a trap. So I was looking for that to happen today, where the market drops lower at 9:30 initially, lures in traders who may be unexperienced and think, oh my God, it's doing the same thing as it did Wednesday and Tuesday. Let me sell it again. So I wanted to see it set the snare, set a trap, and then look to be a buyer. Now it did just that at the open, but that wasn't the real move at the time. Why wasn't that real move at the time? Because if we look at the economic calendar, and this is what I was unaware of, and this was a simple mistake that I made on Thursday that made me mistime the move. We had 2 high impact drivers at 9:45. If we have 2 high impact drivers and a medium impact driver at 10 o'clock, is it a good idea to trade before those come out? No, probably not. The real move is probably going to come after those come out. And my nose is still really itchy. So basically I got caught up buying the market before those drivers came out. So I executed. I don't have my executions on the chart here because I reset the paper trading account before I was able to annotate the executions. But if we look on TradeZella got me. TradeZella has the executions for me. So perfect. Loading. Okay. Now the first trade that I took was a stop out on this gap right here. I wanted to see the drop down at 9:30, right? And it did that, and it overlapped that up candle. So I'm thinking, perfect. This is directly in alignment with my bias. Now I'm going to aim for the nested new day opening gap that I think is the draw on liquidity, if you saw my pre-market plan. So the first long is taken here in this gap, and I stopped out. The stop loss below this little separation in price. I allowed for it to trade down into that, but not really below that. And so when I get stopped out here, I think that I just executed this trade too high in a premium, and now it's had a retracement, and now it's probably going to deliver what I'm looking for. So I go ahead and I jump back in on the second trade, and I get the same result, simply because I'm not aware of what's on that economic calendar, and I'm mistiming the move. So we go to the 1 minute. I framed the discount wick that formed on the 5 minute right there. You can see that dashed red line right there. And I note how this candle opened, it traded down, did not even trade to the middle of that. So I'm viewing that as a sign of strength when the market has basically confirmed and given me everything that I'm looking for. Now I'm going in again at the market, and I stop out on that as well. And the real move that I was looking for did not happen until 10 o'clock, until all those drivers came out. That's when the move that I was looking for delivered, and it delivered the draw on liquidity, the level that I was looking for, beautifully. So if we go back to the 1 minute. Actually, no, let's go to the annotation or the screenshots. So I was looking for the nested new day opening gap as my draw on liquidity. If you look at my pre-market plan, what's the draw on liquidity? I want to aim for the nested new day opening gap. That should be a strong pull on price above that Asia to London high. So it trades right for that. Boom, perfect. Win only after the drivers come out. And that's the mistake that I made on Thursday. So simple mistakes. But as you can see from this weekly review, I am getting better at framing a market approach and submitting to that idea and holding conviction in that and just doing that. And that's all that I need to do, because that is the foundation of all my solid trading days. They all start with this one same element, which is I come to the market confident in one idea and I trade in one direction, and that is it. That's it. And if I do the opposite of that, I get fucked. If I come to the market indecisive, look for two ideas, I get fucked. Now, the other constraint that's holding me back, if we look at the weekly review, the top two ways I continue to self-sabotage. Number one, coming to the market indecisive in my market approach and demanding price deliver the full swing that I'm looking for. So number one being coming to the market indecisive in my market approach, and number two being demanding price deliver the full swing that I am looking for. So how am I going to prevent myself from coming to the market indecisive? Well, I have to continue to master my market approach by gaining more experience through more reps, which is what I already mentioned. Let me move myself out of the way here. There we go. And study the data I've collected to frame exactly my market approach. I have to thoroughly understand higher time frame narrative and market criteria and the blend of those two ideas to build the optimal market approach. I must come to the market only looking for one idea. I am ever only looking to be a buyer or a seller, never both. I am never switching my bias intraday. I should curate rules around this to maintain the consistency of it. So how am I going to shift the focus from being right to making money? I need to implement a partial profit taking system like I said I was going to do last week that affords me the ability to take off and lock in equity at the low-hanging fruit objective. The intent in a trade should be lock in equity, not aim for the level I am confident market is going to deliver. Shift the focus. All I really want to do is be able to feed myself and my girlfriend so I can earn our freedom. That is it. So now you have a good idea of exactly where I'm going right and exactly where I'm going wrong, the main constraints in my trading, this thing, and how I'm going to attack them and get better next week. So what am I doing next week? I'm attempting an eval, and I'm probably going to go with Top Step, so I need to create a risk management plan, and I'll create a video on that tomorrow or Monday, because I'm not going to trade Monday. I might trade Monday. We have a 10 o'clock driver, so I don't know. We have a 10 o'clock driver on Monday, right? Next Monday. 10 o'clock new home sales. It's probably still going to be shit, and I probably still shouldn't trade. We have GDP on Thursday, though, so that's going to be a really good trading day, and PCE on Friday. So Thursday and Friday of next week are going to be really, really good trading days, 100%. So that's where my focus should be. My focus should be in the latter half of the week. I shouldn't be messing around, fucking up on a brand new eval, trading Monday with a medium impact driver. It doesn't make any sense. Focus on the days that I know are going to be high probability. So I'm going to be attempting an eval with Top Step. I need to implement a risk management plan for that with partial profit taking system, so I can lock in equity, shift the focus to lock in equity instead of, I think the market's going to deliver this level, so that's where my target's going to be. No, just trade in that direction, because you don't know if it's actually going to get there. What if it doesn't? What if it doesn't get there, comes back and stops you out for break even? How are you going to handle that emotionally? Because recently, that shit's been pissing me off, and that's a big constraint. So number one is going to be market approach. Number two is going to be low-hanging fruit objectives. That's it. If I can do those two things, I know profitability is mine, and I'm sure you guys can see it in me as well, that I'm going to be wildly successful at this. I'm capable, you're capable, you're a great trader, I'm a great trader, we're all great traders. Let's all build the life that we want and achieve all the success that we want through consistency and persistent day-to-day action without fail, knowing exactly where we want to go and working towards that steadily every single day. That's probably going to be it for this one. I think I've touched on everything. Tomorrow, I'm going to put out a video. Let me just do that right now. This is something I want to do. So I'm working on a page where I'm just visually laying out everything, every aspect of my trading model. You can see all the work that I've done here. So I'm going to do this right now. Self-sabotage. The ways I commit self-sabotage. Self-sabotage. Number one, market approach. Number two is going to be, I am more worried about being right than making money. Plaster this on the wall, frame it, stick it in front of me. These are the ways that I commit self-sabotage. These are the ways that I hold myself back right here. Okay? So, like, these are all things I'm working on right now. It's so cool. It's so fun, bro. This is your creation. Treat it that way. Treat it that way. Stop disappointing. Stop disrespecting yourself by not chasing your dreams. What the fuck is wrong with you? And risk management plan eval. Perfect. Okay, cool. So now that's going to be it for this one. If you watched to the end, thank you. Thank you for your attention. Thank you for your time. I hope that you could get something out of this video. Hopefully I could inspire you. Hopefully I can motivate you to become the best version of yourself. And if you're a subscriber to my channel, I appreciate the support. And I will continue putting out content that I hope is of value to you. Maybe even entertainment. So that's it for this one. Talk to you tomorrow.